Have you ever felt like the market is speaking a language you just don't understand? Well, today, that changes. We're going to stop just looking at charts and start reading them. We're going to build a clear blueprint and trade like architects. So here's our mission for today, plain and simple. We're going to learn how to read the market structure, get our trend lines drawn perfectly, and really get the difference between a break of structure, that's BOS, and a change of character, or CHOCH. Most importantly, we're going to master the pro strategy of trading only on retests. I mean, come on, does this look familiar? You see that perfect breakout, you jump in feeling confident, and then, bam, it immediately reverses and stops you out. It's one of the most frustrating traps in trading. Today, we're going to unpack exactly why that happens, and more importantly, how you can be on the winning side of that move. All right, here's our roadmap. We're starting with the absolute foundation, the market's blueprint. Then we'll layer on the right tools and signals. We'll build out a rock-solid strategy, and then we'll cap it all off with the one thing that makes it all work, a disciplined trader's mindset. Okay, first things first. Before you draw a single line on your chart, before you even think about an indicator, you have to learn the basic grammar of the market. And that grammar, my friends, is called market structure. At its core, market structure really only tells us one simple thing. Who's in control? Is it the buyers or the sellers? By just analyzing the sequence of swing highs and swing lows, we get a totally unbiased view of where the market wants to go next. Everything else we do, every tool we use, it all builds on this. And you know, the beauty of this is how simple it is. An uptrend isn't a gut feeling. It's a fact. It's just a series of higher highs and higher lows. Same for a downtrend, lower highs and lower lows. The second that clean sequence gets broken, you know the trend is either in trouble or it's reversing. It's our first objective truth on any chart. So once we can see the structure, we need a way to visualize it. And that brings us to one of the most popular, and let's be honest, one of the most misused tools in all of trading, the trend line. Right, so here's the deal. A trend line has to be objective. It's not a piece of art you get to interpret. It's a technical tool. You need at least 2 swing points to start it. You always include the wicks. That's where price actually went. And that third touch is what really gives it power. But please, the most important rule, if it doesn't fit, do not force it. And this right here, this is a mistake that costs traders an absolute fortune. A broken trend line is just a heads up. It's a warning sign that something might be about to change. It's your cue to pay very close attention, not your signal to jump into a trade. The real signal comes later. So if a broken trend line is just a warning, what's the actual signal we're looking for? Well, this brings us to 2 of the most important concepts you'll learn. CHOCH, the change of character, and BOSS, the break of structure. Think of it this way. One is a whisper that change is coming. The other is a shout that it's here. Okay, so let's break this down, because this is huge. A CHOCH, that's your first little hint. In a strong uptrend, it's the very first time price fails to make a new higher high. It's the market whispering to you, hey, the buyers might be getting a little tired over here. But a BOS, a break of structure, that's the definitive proof. That's price smashing through a previous swing point and shouting, okay, we're going. This might be the single most important rule we talk about today. You have to burn this into your brain. If a candle doesn't close beyond a level, it's not a real break. That long wick you see that pokes through and then pulls right back, that's not confirmation. That's a trap. It's a liquidity hunt designed to fool impatient traders. Real commitment is shown by a candle close. Period. All right, now it's time to put it all together. We can read the structure, we've seen the warning signs, and we know what confirmation looks like. So how do we actually get into a trade? This is where we stop thinking like amateurs and start using a professional, high-probability approach. I want you to memorize this. Seriously, say it out loud. This is the mantra that will save you from so many failed trades. Amateurs get excited and chase that big, explosive breakout. Professionals patiently wait. They wait for price to come back and prove that the old ceiling has now become the new floor. And here it is, your exact checklist. Step 1, you wait for that valid break with a clean candle close. Step 2, you do absolutely nothing. You just wait for price to come back to that broken level. Step 3, once it's there, you look for a clear sign of rejection, a pin bar, and engulfing candle. And finally, step 4, you confirm that rejection with a spike in volume. Every single box has to be ticked, no exceptions. So, why are those wicks so dangerous? Because they aren't random. They're often deliberate moves called liquidity hunts. You see, the big players know exactly where everyone is placing their stop losses and their breakout entry orders. So they push the price just far enough to trigger all of those orders, grab all that money before reversing and starting the real move. By waiting for the retest, you avoid becoming their fuel. This says it all, doesn't it? The market needs fuel, liquidity, to move. Impatient breakout traders are more than happy to provide it. Patient retest traders, on the other hand, wait for that little game to play out, and then they enter to ride the real, confirmed move. So the question is, which trader do you want to be? Okay, let's talk about indicators for a minute. Here's the key. We use them for confluence. They don't generate our signals. Our analysis is always structure first. Indicators are just there to add an extra layer of confirmation to what price action is already telling us. Here's a simple but really effective toolkit. We use EMAs just to get a quick read on the overall trend. The RSI is great because it can warn us about momentum slowing down, sometimes even before the price shows us a CHOCH. Volume, well, that's our truth detector. It validates the strength of a move, and the MACD can help us spot when a trend is running out of steam. Knowledge is pretty useless if you don't apply it. So here's your homework. Open up your Bybit charts, look at Bitcoin, Ethereum, or Solana. And here's the key. Don't trade, just watch. Mark up the structure, identify a valid break of structure, and then just watch and see if price comes back for that retest. Take screenshots, journal what you see. This is how you build real confidence. So we've gone through the entire technical strategy, from A to Z. But I can promise you none of it, not one bit, will work without this final and honestly most important piece of the puzzle, your mindset. Just look at this comparison for a second. On the left, you've got emotional, reactive, impatient trading. On the right, you have patient, logical, process-driven trading. The difference isn't some secret indicator. It's just discipline. It's the habit of waiting for your A-plus setup and not getting tempted by anything less. Your job is to have a plan and refuse to break your own rules. Okay, let's boil everything we've talked about down to the absolute essentials. These are the core rules. The trend is nothing more than the sequence of highs and lows. CHOCH is your warning, boss is your confirmation, the retest is your entry, and a candle close is the only thing that makes any of it valid. If you can internalize these rules, you'll have a powerful framework for looking at any chart anytime. And really, that's what this all comes down to, isn't it? The charts are always showing you the plan. They're showing you the structure, the warnings, the confirmations, everything. The strategy isn't the hard part. The hard part is developing the patience to just sit on your hands, listen what the market is telling you, and only act when every single one of your rules has been met.